Hey, it's Mike Lynch with Cross Country Mortgage, and it's time for Monday morning mortgage update for the week of August the 7th. Hope everybody had a fantastic weekend. I had a great weekend. It was hot, stayed cool on the lake, rode my bike, went up to Dunsmuir and spent time with friends at the Brew Festival, one of the oldest brew festivals in the country. So don't miss it next year. Great music, great food, and great beer. So let's talk about the market. I always try to give you some tools, tips, tactics, things that you can share with your buyers and sellers when they ask about what's happening. Should they buy? Should they sell? And I always review last week and then tell you what's going to happen this week. So let's talk about last week. Big week last week in volatility. The market just went all over the place, but actually rates ended pretty flat. I want to show you how volatile it was and then explain to you why we saw that volatility, because it really created a lot of fear and uncertainty in the people that I talked to. So if we look at this graph, this is a trading of mortgage-backed securities in the bond market. I show this to you often. When we see the green bars, that means money's flowing into the bond market and rates are getting better, lowering. And when we see the red, money's flowing out of the bond market and rates are getting worse. So mortgage rates are determined by the trading of mortgage-backed securities in this bond market, not when the Fed raises rates. And if anybody tells you that rates are determined by the 10-year Treasury or when the Fed raises rates, they just don't understand the market. Do those have an indirect impact? Yes, but this is where mortgage rates are determined every single day. Lenders look at this bond market trading on MBS, mortgage-backed securities, and that's where they quote their rates from. So if we look at the 31st, that was Monday of last week, and then we went, and I'm showing you my cursor down here in the bottom right. You can see that it went down, down, down. That means rates went up. And then on Friday, we saw rates get better. Huge, huge improvement in the market. Why did this happen? Well, a lot of data that came out at the beginning of last week showed the economy was doing fairly well. And then the big jobs report came out Friday, and it really wasn't that good. It was, it wasn't anything anybody got excited about. And the bond traders said, hey, maybe this means that the Fed's going to stop raising rates. They're not going to do it in September, and they're just going to let this Fed fund rate stay flat and really kind of cook us into some kind of a recession. And that could be good long term. That means that mortgage rates are going to end up getting lower because more inflation is coming down and starting to get under control. So that's what happened last week. So let's talk about this week. What are we looking at? I always try to give you three things. Inflation, big inflationary reports coming out this week, Treasury sales, and then a lot of other data overseas. But the big thing is inflation. So we get two reports every month, CPI and PPI. The CPI is what are consumers paying, and the PPI is what are producers paying. And these reports come out Thursday and Friday. And so when we see the CPI inflationary reports and the PPI, they always look at what was the inflation last year, and is it are these numbers better or worse? And what is it doing month to month? Okay, so we've seen month to month inflationary numbers actually increasing, but increasing at a lower rate. And then the last report that came out last month showed CPI and PPI replaced higher numbers. So that was really good. It means inflation is getting under control. But now we're going to look at this week and this month and replacing last year. And we don't see those numbers really being that much different. Why? Because we were coming off of such an unrealistic market in 21 when inflation was really high, that now we're starting to see more realistic numbers as inflation started to increase and the Fed was raising the rates. So we're not getting drastic changes now. And so a lot of what's going to happen with mortgage rates are really going to be determined on Thursday and Friday. Are these inflationary numbers year over year going to be about equal, or are they going to be better? Inflation is the kryptonite for mortgage rates. So if we see inflation go up significantly, or maybe not that much of a change, it could be worse for rates. So we're really heading into the end of the week. That's the big decision on what rates are going to do this week. Long term, we know these rates are going to get better, but this might be a tough week on those rates just because those numbers may not be that much different than they've been in the last few months. Next thing is Treasury sales. So the Treasury, the Fed sells bonds and notes to raise money. They do this once a month. We typically see 3 and 10-year notes and then a 30-year bond. And these are auctions, and investors invest in the bond market. Your 401ks in the bond market, your CalPERS, individual investors, foreign investors, everybody puts money in the bond market at some capacity. And so we're really looking at the 30-year bond auction. That has the ability, there's been some appetite for it. And if the bond traders and people that invest in bonds think that maybe it's going to be strong long term, we might see some money flow in and buy those 30-year bonds in that auction. And that could be beneficial for mortgage rates. So we'll be watching that at the end of the week. And then the last thing is just a lot of data overseas. China, Japan, Germany are all coming out with their rate decisions. They're having their equivalent of our Fed meeting. And then Great Britain's coming out with a lot of economic data. So not really going to move the market that much, but it could. It depends if that data is significantly worse than expected. And we're a global economy, so we pay attention to that stuff. So what are we doing this week? We're floating into Thursday and Friday, really. And those are the big 2 days that are going to impact the market. Obviously, if something changes, we'll change to a lock position. If you have anybody that wants to get insight on their rate or their mortgage, we're here to help. I don't just put this information out there. I'm actually a mortgage banker and a mortgage broker, and I am more than willing to help your clients really make sense of the market and put them in the best loan and the best product possible. All my information is down below. Forward this to somebody who can benefit. Have a great, productive week. We'll talk to you next week. Bye-bye.